Welcome to the Coverage and Coffee podcast. My name is Casper Harse. Joining me is Harsh Chandnani, and today we are talking about emerging markets. Before I kind of give the quick one, to any thoughts on last episode, this episode, we do have Harsh back today, so great
Yep.
to have you.
Thank you. Good to be here. Thoughts on the previous episode? I don't know. What did I just completely went blank on what we spoke about on the previous episode?
Put your headphones on, buddy. We're not redoing this.
No.
We spoke about embedded insurance last time
Yeah.
and insurance that's included and not included. And it's not. I feel like we've had a lot of smooth segues in some of our previous episodes, but this is not going to be as smooth of a segue. There are some points that we're talking about later today that do connect to what we were saying last time. But yeah, any general thoughts? Now that I've refreshed your memory, any general thoughts?
I mean, I feel like we brought up a lot of examples from the real world where we kind of spoke and got into detail with them. And I feel like I'm excited to dive into this episode because there's just so much stuff that's like coming out, and we are going to be discussing all these emerging products in the market and how insurers can place coverage on these risks.
Yeah. But I will come in with a correction before the intro. It's not so much emerging products we're talking about. It's not like new types of insurance. Like embedded insurance is like a new product within insurance. It is more emerging and new risks or industries that emerging markets kind of tackles today.
Right.
Emerging industries is kind of new and growing industries that perhaps were not the common type of industry that we've had in the past, right? It kind of says in its own name. But what this means from an insurance angle is that there's not enough data, there's not enough understanding, there's not enough context within that industry to be able to fully understand how risky it could be, right? We want to go back 100 years. This could be the emergence of the car, right? And kind of understanding the impact that had. And also, if you look at it historically, there's a big reason why car manufacturers were actually involved in insurance originally, involved in car insurance originally. And that's because it was a very new market. And we're going to be talking about this more from a modern perspective, right? What's emerging today. I will start with a little bit of a semi-historical example, which is satellites. I think the first piece of satellite insurance came in 1965. I don't remember the exact piece of the exact satellite name, but primarily this is around the launch of these satellites. So they're ensuring the launch process and ensuring that there's proper due diligence done. Are we going to get this to launch or not?
Right.
I think it's only something like 20% of satellites in the air are actually being insured on an ongoing basis. More recently, but not quite super new, is cannabis, right? We did talk about this last time, or we talked about this a couple episodes ago, but cannabis was something that was really big in the ENS space when that really started to grow 2016, 2018. It was an unknown risk. So you get these surplus types of insurance, this specialty insurance. And that was a really big example of an emerging market because we had that political risk. We had that, state by state production risk, country by country consumption risk. And the insurers weren't entirely sure where this, political movement was going to go in terms of legalizing it. More modern from that is then the crypto, the NFT, the AI insurance being incredibly new. I mean, crypto insurance and NFT insurance, we're not going to talk that much about. I think that's kind of a dead market at this point. But crypto insurance, AI insurance, obviously these are incredibly new industries. So their insurance is also quite new, but the insurance does lag a little bit. It's not like the moment this new product comes out, we're going to immediately see insurance for it. But there's risks within crypto. There's these, hacks that occur. There's these, there's that same information protection systems that are required. There's that same need to have your risks being covered, right?
Yeah.
So any thoughts on emerging, risk markets then?
Yeah. I feel like you're on the right track with the whole well, I'll start from the beginning. You mentioned cannabis, and I feel like as legalization spreads throughout different countries, like we're seeing in the US right now, I feel like insurers kind of find it difficult on like what specific areas they can cover, and those gaps are mainly being filled by specialty insurers, right? And for now, I feel like did you know that cannabis is still federally illegal in the US?
Hmm.
So um, yeah, I think that most insurers avoid it, which leaves like a coverage gap.
Yeah, you know, exactly. And it can be really complicated because let's say I don't know exactly, but I know Colorado, California, it's both legalized in those two places. But let's say you are producing cannabis in California. One thing that I did see was that, you know, sometimes you can get these things delivered. You can't actually use the US mail for this because that is a federal system, right?
Mhm.
Like they are not going to abide by that. But then another thing is, right, goods are transported across the US all the time, right? It's very quick to think liability when you think emerging markets, right? Like what could happen to the people involved. But even just logistically, like a lot of goods are trucked around in the US. Can you drive a truck full of weed from California to Colorado? Can you fly it? Like, or does it have to be produced within state? I'm sure there's regulation as well in terms of maybe one of these states says it has to be our local, no, we got to smoke the local Mary Jane if we're going to be smoking anything.
Yeah.
But even then, like there's a huge, when you have these emerging markets, when you have these growing industries, there's a huge unknown in terms of how do these things apply? Because like many laws in many countries, um, insurance works on precedent, right? In the
Mhm.
sense that once something has been tried and tested, we now have more information about this risk, right? So, you know, if there's uncertainty, can we actually truck these things? Someone eventually needs to test that, get caught testing it, and then there needs to come a case out of that for the insurance companies to be able to plug that information into their systems and say, okay, yes, this is a risk that we need to account for, or no, this is not a risk we need to account for.
Yeah,
Right.
yeah, and I feel like from a seller's perspective, a lot of these cannabis companies they require a lot of coverage when it comes to not only uh not only just like D&O insurance, like not only for the people but also like crop insurance for their products, and I feel like these risks are growingly more difficult to cover.
Yeah, I mean, I think at its very core, let's take the crop insurance, right?
Yeah.
Like, I don't think that a cannabis farm can get the same type of insurance that a corn farm could, right?
Yeah.
Because I don't think your local teenagers are going to try sneak on your corn farm and steal a corn cob off your farm, and it's going to make a big, you know, problem. But then let's say a bunch of teenagers sneak onto your cannabis farm and they sneak off a couple plants. They are underage. You maybe didn't protect things properly. There's, you know, I think a lot of it's done in greenhouses because it can grow year round, but still, right? In the sense that there's a completely different risk profile that ends up following suit, right? I mean, sometimes you'll go by a farm, you'll be driving in the countryside and you'll see a little farm stall, you know, and they're selling eggs, they're selling milk. You can go in and see the cow. Um, you probably can't do that with weed, right? It's not like
Mm.
the farmer can be like, oh, well, the market didn't want, you know, this bundle, so I'm going to go out on the road and sell these buds out, right? Like it's a complete, even though you can like compare industries in these emerging markets, and it's the same for crypto, right? You can compare crypto to finance. And then the question might arise, why can't we just use the same tools, the same products, the same type of insurance for crypto than we do for finance, right?
Okay.
Any thoughts?
Uh, I mean, I just feel like they're two very different markets. When it comes to crypto, you you just have a lot of risks to your, I guess, your wallet, your any of your digital property and crypto assets. Um, and since this is all online, I think it gets increasingly difficult to cover that risk because of, I guess, just the cyber risks
Yeah,
that
100%.
could affect you at any given moment. And
100%.
we've seen so many examples of such things happening, right?
Yeah.
Um
I mean, we've seen even crazier situations in the crypto space, like what was it, Binance? One of the
mm,
larger marketplaces went under because of mismanagement, right? It actually, I mean, it goes back. There's so many different factors. There's just that the fact is that the risk is unknown, right? And
yeah.
then there's the, you know, in finance we have that FDIC, that federal, you know, banking backstop, right? That they will, regulated banks will have some sort of protection from the government, right? Cryptocurrencies, don't have that. There is that wallet protection, there's that cyber protection. But at the end of the day, it once again goes back to precedent, right? Because yes, we may have a very similar situation, right? Where a person sues their bank and their bank ends up losing and they got to pay this guy his money back because of, fee misusage or something, right?
Yeah.
You weren't transparent on fees. And then a crypto marketplace does the exact same thing. They're not transparent on fees. Someone ends up getting overcharged. They end up suing the people. But the problem is we can't just go to the president and say that a bank did it, right? Because now it's a crypto exchange, right? There's no precedent for that specific situation to have occurred. So we end up with this situation where the people providing this insurance need to be hyper specific. They need to understand the industry. They need to understand what is equivalent and can help make them a price, and what is different and would actually stray them away from properly pricing that risk, right? But there's so many different, and this kind of idea of we need some sort of evidence. I'm going to bring us back to the satellite real quick. So like I said, there's a lot of insurance, like satellite insurance is a pretty big industry actually at this point. I'm gonna quickly try to see if I don't have the number here. There's only 300 satellites in orbit with insurance out of the 10,000. Typically, a good portion of that will get the launch insurance, but they won't continue it perpetually. Claims on these satellites are a couple $100 million, right? It can get really, really expensive, right? I think actually last week, did you see that article? There was a plane flying that I think is the first reported case of a plane hitting space debris, right? So people will launch satellites and they have a certain time period that they're useful or alive. And then when the satellite stops working, it's not like there's a garbage collector up there picking up the old satellites. What ends up happening is that they slowly go into orbit and then they will disintegrate because of the gravity, right? But small parts will still hit. And apparently the cockpit of a plane got hit by space debris last week.
Wow.
Really, really crazy situation. But there is something emerging within the satellite and space industry. And I don't know if you remember the Blue Origin Katy Perry going into space, I think last year or something.
Dude, I think like I definitely saw it on social media somewhere, and my exact thought was, are they serious?
It's crazy.
Yeah.
It's crazy. There's so many small anecdotes about that. I saw, they brought William Shatner up, the guy from Star Trek. And he's had a whole life around space in his acting. And apparently he went down, it was really emotional for him. When he came back, he actually became a huge climate activist because he was like, this is our world. I can see it, I can cover the whole world in my thumb. Like, we got to take care of this place. Anywho, one of the aspects that come from that from an insurance lens is, what if something happened to these tourists, these guests, right? They either paid to be there, they were invited to be there, but none of them trained or were paid to be there. They weren't like, oh yes, there were astronauts. They were actually, trained professionals there. But, if something went wrong, it's not like Katy Perry's going to hit the intercom up and, get talked through on saving the situation, right? This isn't a space movie. And it creates this idea of, well, don't these companies need insurance for their guests, right? Like, there's this, I remember a couple of years ago, before seemingly the world went completely, to shit, to put it bluntly. There was this small wave of oh, there's going to be space tourism. There were these billionaires who were like, oh, we're going to make a space hotel, right? And we're going to send people up and down, and you can have have your honeymoon in space. It's going to cost you $100,000, but you can be in space. All those people are going to need insurance, right? So right now, and I read up on this, all the people who went up, they signed this U.S. Space Agency or NASA liability waiver that pretty much just said, we are not at fault for anything that occurs here, right? You cannot blame us for anything that occurs here. The thing is, most liability waivers, you go on a zipline tour or something, and they're like, hey, you got to waive away your liability. They're not actually worth anything. They don't stand up in court. Okay. The thing is that this NASA one has never gone to court, right? There hasn't been a astronaut who decided to sue NASA. But now we're starting to get tourists, and we're starting to see private enterprises using the same liability waiver. And at the end of the day, there's a lot of money being put into SpaceX, into Blue Origin. I think what's really going to kill space tourism is space tourism insurance. How the hell do you price that?
Yeah, I mean, we go back to what you mentioned earlier, right? There has to be these kind of test cases where like something goes wrong, and then insurers kind of um, see how they cover that area or how they price those situations. But then at the same time, the possibilities are so endless when it comes to space, right? So I I don't know how space insurance is really gonna work in.
I mean, I think just going back to our embedded insurance conversation last time, right? Imagine you're booking your space flight, you got the chance to get embedded insurance, and then there's bad weather. Your $1 million space trip just got canceled. Like,
It doesn't even take off. You suddenly just blow up right
no,
on
no,
the spot.
exactly,
Yeah.
and then that's the thing. It's like what what realms of possibilities are there really? And then also you have to consider the fact that okay, let's say me, seven other random people, we're taking the Blue Origin rocket up to the Blue Origin hotel orbiting around Earth, right?
Yeah.
And then one of the other idiots decides to do something stupid, right? Like technically, when you're flying an airplane, some idiot could go and open the emergency exit, right?
Yeah.
Like they are open, right? Obviously, people will stop you. But I'm assuming there'll be an emergency exit on that Blue Origin flight. And I'm assuming an idiot would be able to open it up. Whose fault is that? Is that Blue Origin? Is that guy? Does that guy need insurance to make sure that he doesn't screw over the other guys? Like, this is the thing that I mean that I'm saying it's going to kill this industry in the sense that people are not going to be willing to take this chance, and companies are not going to be willing to take that responsibility. The amount of money they would have to charge, that $100,000 1 week in space hotel vacation, would have to be $1 million. And even then, they would need so many trips before, it only takes one trip to go wrong before your business is shattered, right? Let's say you're the week after the rocket crashes before it even takes off. Are you going to go on that trip?
I'm definitely not going on that trip.
No, exactly.
And you mentioned that you'd need so many trips to kind of cover this, but imagine the amount of trips it would take for you to actually build these hotels out there.
Mhm.
Um, I don't know. I don't know how exactly that would work. Do you have any thoughts on that?
Well, I mean, I'm assuming it would build something similar to the International Space Station, right? Like some sort of modular system. But
Yeah.
I mean, there's just so many points of failure for something like this. Anywho, I feel like we went on a little bit of a tangent. This is not the space industry or the space hotel industry podcast. But there are businesses who are specializing in these specialty
Mhm.
markets. Actually, we heard a guy talk at a conference, an Insurtech conference, from a company called Realm, actually, and that's not Realm with an A. It is just RELM. And these guys are really the leading specialty carriers when it comes to things like Web3, when it comes to space, when it comes to AI and these things. These guys are very quick to go to market. They're based out of Bermuda, so they kind of give that wholesale, that specialty insurance level, right? I mean, I don't think that there's any regulation right now that says a crypto company needs insurance, right? But there's probably contracts with their investors, right? Let's say, I don't actually know the names of any crypto spaces other than Binance, but
Binance,
okay, Kraken, for example, Coinbase, right?
Coinbase.
Coinbase wants to expand. They go to some private investors, and their investor documents will say, okay, we need some sort of risk mitigation strategy. We're not going to give you $100 million with no guarantee that you don't have any risk mitigation strategy in place. So then they are kind of forced, even though it's not regulated, they're kind of forced to go to places like Realm and say, okay, what can we figure out here? And I know that the Realm guy, I think the guy who presented was one of the founders, and before he had started, he'd actually worked in the crypto space out one of these marketplaces. Like an up and not one of the big ones, but one of, they were trying to build their own marketplace, but they hit that same problem, right? Risk mitigation is really difficult in emerging markets. And then being able to understand the industry themselves, they understand how it works. They're able to do a little bit better than some of the traditional players who are not willing to take a risk like that, right?
Yeah, and I also kind of when I was doing my own research about stuff like this a while ago, I came across these startups like Evertas and CoinCover that also kind of like cover these metaverse, aka crypto related risks. And I feel like I, I don't know, I just I don't understand how going back to the space thing. I don't understand how you would insure these risks, right? because crypto itself is such a vast field and there's so many possibilities for things to go wrong.
Yeah, no, 100%. I mean, there is so much unknown in terms of exactly how this can go down. Um, So, I mean, it turns out there's also individual level crypto insurance, right? Like, so you could be a wallet holder and you could get insurance on your thing. I don't know exactly what that covers, but I'm looking at a company called Quartz right here that has crypto insurance, and they charge 2.5% of the investment value, which doesn't sound insane. I guess it depends on what it covers. Yeah, sorry. Any thoughts on that?
On 2.5%.
Or just crypto insurance on the personal level, right? Because some of the things are out of your control, right?
Yeah, I mean, I thought that's how it would work. But when you say personal level, how do you mean?
So like you as an individual, you get crypto insurance for your portfolio of insurance, not like Coinbase gets insurance for their portfolio.
Right, right. And that's what I meant with these startups like Evertas and CoinCover. These provide like personal levels of insurance for crypto. So I think it's very necessary because you should be able to insure yourself against these risks that could happen to your assets, right?
Yeah, no, 100%. But it's just like, because I'm thinking, let's say, I'm sure Coinbase has a much more intricate, wallet hash saving system than just popping it on a database and crossing their fingers.
Yeah.
But let's say there was someone who was able to get access to all those hashes, right? We're talking billions of dollars, right? Obviously, that would crash the market a little bit because all of a sudden, there's vulnerabilities in the system. People don't trust the underlying value as much. But could you, like, I don't think you could ever get insurance that would actually fully cover the risk of something like this, right? Because the thing about like a bank, right? Like, let's say somehow, like I said, they're not just saved in a single database. It's not like you can just press a button and take all the money out. But let's say a bank, Bank of America, someone gets root access, they transfer all that money into crypto, and then they sell the crypto, right? Bank of America loses all their money somehow. Obviously, this is a very simple example, but in a situation like that, the government would step in, right? They may not, help fully, but they will help the situation. But if Coinbase loses access to all their crypto hashes or something, because the opposite could also occur. Let's say crypto or Coinbase over encrypts their data, and then they lose access to the underlying data, right? I mean, you've seen stories of this where people, I have my wallet on a USB drive, and I encrypted that thing. I put a password. It's triple encrypted. If you fail the password 3 times, it wipes everything.
It's gone. Yeah.
And then they hit their head and they forget their password, right? Like, could that happen at a place like Coinbase? And then how do you insure these types of things, right? It's not a simple answer.
Yeah, but I feel like if you're running an organization such as Coinbase, I don't think you can afford to mess up like that,
Yeah, but I'm sure that's what people said about Binance before Binance went.
You may be right. Yeah.
But there are other types of emerging markets. One of them that I saw that was quite interesting was kind of the biotech space. I know you have some things to share about that. The two spaces that I kind of want to touch on is psychedelic therapy. I actually saw. Oh God, I got to double check this. But there was so Enthea has become the first benefits plan. Let's see where this actually is real quick before I continue this. But it's become the first insurance benefits plan that provides psychedelic healthcare. So this is ketamine-assisted therapy or psilocybin and MDMA if it gets FDA approval. So it's like targeting PTSD using ketamine and using drugs, and that's an incredibly emerging market. That's an incredibly risky market, right?
Yeah.
Like, I mean, it's medical care, but if it's not fully stamped of approved by everyone, it's not exactly like backable medical care.
It is medical care, but I don't understand how it could not have any negative implications on your health as well.
Yeah, but that's like saying you break your leg, you go to the doctor, and you get a painkiller prescribed on you. A painkiller could have very negative effects on your health as well, right?
Yeah.
But doctors aren't able to be sued for that unless they can go to jail for it if they overprescribe type thing. But I'm assuming something like a ketamine-based, psychedelic therapy. They're probably being very, very careful right now. But it is slippery slope. Where do we go, right? Like,
Mhm.
because if someone starts to insure it now, and then the industry grows and kind of spills into something unknown, right? Like we could not see where this was going. Kind of like how medical marijuana was to begin with, right? Where oh yeah, I need a prescription from from my doctor. I got glaucoma type thing, right? If you go back to that traditional stereotype in the U.S. Um, and then the other one that I wanted to touch on before I pass it over to you is gene therapy. So have you ever heard of CRISPR?
No, I haven't.
If you've ever seen what's that YouTube called, like Kyrgyzakt or something?
Yeah.
Yeah. So here's a CRISPR is this kind of gene learning medication. It's a new type of medication, and it's supposed to help with cancer treatments, like chronic diseases, things like that, because it can replicate your cells in your body. But obviously, when you also think of gene therapy, you start to think a little bit about cyborgs or superhumans or whatever, right? There could be massive, massive ailments that occur from gene therapy, right? Let's say you decide, okay, I'm going to be one of the first people to get this. I want to pioneer this space. And it actually does the opposite. It eats all your cells instead of, I'm not going to fearmonger CRISPR. It's a fantastic technology, but it's just for the sake of argument from an insurance lens. Um, it is really, really difficult. And I'm reading here that there are quite a few big health insurance companies in the US. So Vantage Blue, that's Blue Cross Blue Shield. I don't know if you've heard of that. It's a really big health insurance in the US. Select Health and Viva Health, all their policies exclude gene therapy entirely, right? So that might change because I still think CRISPR is very early. But there's also different types of like Medicaid based insurance that also exclude gene therapy, even though gene therapy is sometimes the only solution for things like sickle cell and things like that. And that's purely because of this unknown, this lack of precedent, this lack of understanding in terms of what is this going to mean? Is it actually worth it, right? When we're talking about health insurance, it's slightly different from is the actuarial model risk valuable? Because in health insurance, a little bit, do we have to pay for this, right? Like that's two sides of this. It's they're both insurance, obviously, but this is going back to what we said the first episode. Very different perspectives on insurance when you're talking about personal health, things like that. But sorry, yeah, you had something you want to share about biotech as well.
Yeah. So I mean, have you heard of the company 23andMe?
Yeah.
Yeah. So you know how they were banned in 2013 because because the FDA was unsure that they were providing consumers or their customers with actual data, like accurate data, and they didn't want people to make like health decisions based off of that. And now what's happening is I think they're shutting down again because of those accuracy claims made against them. And they're selling to GlaxoSmithKline. And what they're selling is their customers' data, like your genetic data.
It's actually a little bit more screwy than that. So a fun side fact.
Yeah.
Do you know who founded or is the CEO of 23andMe?
I forgot her name.
Yeah, it's the ex-CEO of YouTube.
Okay.
And Wojcicki. But yeah, it's actually a lot screwier than that because 23andMe this year actually they went bankrupt and they're splitting apart. And I think it's because you're right. They were banned from selling the data in this sense. And that was kind of their entire business model. They weren't making a lot of money from these tests. People aren't going to pay $200 for a gene test. They'll pay $60 for a gene test. The problem is gene testing equipment and constantly making these things better with the idea that one day we could use this for medical research. That is a very valuable value proposition. But if it's just a bunch of data you got to store and hold, it's not really. They went bankrupt. They got sold in like court. And they got sold to Anne Wojcicki, who bought them under a new company that does not have the same terms of service that the original company has. So all that data is now re-owned in the same name by a different company, by the same person, but now with the right to sell and use the data. And that's how they started selling it.
That is all right. I don't know what to say about that because when I was reading an article about this, it mentioned that these guys could not. So these guys, when they sell their data to GlaxoSmithKline, it's gonna be completely anonymized. Like your data is gonna be anonymized. But then I guess I don't know. That really brings up the question, right? That I don't know.
I mean, it's actually quite interesting because bringing it back to an insurance lens, this is, dystopian, this whole company and everything it stands for and what this data is going to be used for. It is dystopian. It is incredibly, it's a little bit outside the lens of insurance. Is this ethical, right? Like there is no efficacy insurance. But what's actually quite interesting, I'm reading on it here. 23andMe filed for bankruptcy due to a decline in demand and a large payout following a 2023 data breach. So they had already lost some of their private users' data, and it's very sensitive data. So they were probably, they had to pay a massive fine to do so. But it's interesting because there is cyber insurance, there is reputation insurance, right? There is, it's actually funny, a big part of cyber insurance, a big part of the payout is not so much fixing the issue or remediating clients, but how can we fix the reputation of the company? So I wonder, I mean, I'm assuming, I mean, I can do another search here, 2023 and me, cyber insurance.
Yeah.
Nope, they have only been fined. I don't see anything big on them actually. Typically when there is something insurance related, there will come something out from like an insurance news site being like, hey, these are the people who are covering it. This is the kind of conversation. I don't see anything like that. I see a lot of restructuring, a lot of, articles about the cybersecurity event itself. But it's interesting.
Yeah, I think it's pretty interesting that you said that they sold it to the same person under a new company name with completely different terms and conditions, because the article that I read said that their terms and conditions allowed their customers to withdraw their information from the company's database before they sell it. Or they could just leave it and then the new company would have it under like an anonymous persona. But
yeah, but it says here only 15% of the existing customers have requested closure of their accounts.
15,
so that's still a huge percentage that either don't know that's possible, right? Because it's not like 23andMe with the last, we got $10 left in the bank account. Let's make sure we spend that on emails to tell everyone to pull our data back, right?
Yeah. And they have, I think, somewhat like 15 million customers so far over this.
Did you do it?
No, I haven't.
I actually know a couple of people who did it, and every single time they did it, it was like, well, duh, right? Like they see the results and they're like, well, yeah, I knew who my grandparents were, and they knew who their grandparents were. Like, yes, amount of customers. So yeah, you said 15 million?
Yeah.
Yeah, over 15 million. But that figure was from 2015. They are saying that in 2023 they were apparently at their peak, but they didn't say how many, right? I mean, they didn't have to report these figures, right? The hack was at least 7 million users got their data lost. But yeah, I mean, we're not here to find the answer on how to fix this type of insurance, I think. So some of the other things that we wanted to chat about on emerging markets, I'll let you take the pick. So we have the creator economy. We have renewables, which is funny to talk about in an emerging market nowadays because I feel like it's very commonplace to hear this in typical conversation, but it used to be a very emerging market. And then the gig economy, which kind of connects a little bit to what we were talking about last time. I'll let you take your pick. I can't actually see what it says there, but I think we are running close out of time here.
Yeah. Why don't we start with some creator risk?
Yeah. So the creator economy, I mean, everyone's on social media nowadays. We're posting this on social media nowadays, but the creator economy has obviously gotten really, really big. If you're ever curious, you should really try to figure out, your favorite content creators. How much are they making per advertisement, right? When they make a little advertisement in their YouTube video or in their, actually, do you know the guy Moist Critical?
No.
He used to be an extra in Hunger Games.
Really?
Was it Walking Dead? Shit. I should have remembered this. I don't know why I feel like I need to. Hunger Games. Yeah, he was an extra in Hunger Games in the background. That's not how he got big. He's a really big YouTuber nowadays, but it's a joke. He recently made a video releasing his career earnings. This is like a 12-year career. Lots and lots of like videos. This guy has made over $40 million purely from advertising, not counting his merch, not counting his sponsorships, his ad breaks, purely from ad money in the last like 12, actually it's a little bit over 12 years, like 14 years, he's made $40 million, right? And obviously probably a little bit heavier on the back end than when he was very small.
Yeah.
But the creator economy has a lot of risks, right? I mean, we see these all the time, these like pranks gone wrong, right? I don't know if you remember that period of YouTube, right?
Yep.
So there's a couple different types of creator economy. There's that classic production insurance, right? Think about Mr. Beast and think about his grand productions. There's staff there. There's people setting everything up. There's, people monitoring, making sure everything's okay. The editors, everything. They get their, employee insurance, right? They probably have health and benefits. They probably have, setup and breakdown type insurance when it comes to the actual production. But then there's also like defamation, right? Like let's say we're on this podcast and we talk poorly on Mo, and Mo then, comes and he's annoyed at us, and we then talk more about him to the point that, our viewers start harassing him. Mo is for those who are just joining this episode, he is the primary host. And he decides to sue us, right? It's a completely different type of space than like, typically defamation is an individual going to the press or whatever. But when we're talking here, it's a completely different environment. It's supposed to feel casual. And I feel like there's probably a lot of creators out there who forget that they are a part of a production, part of a product,
that
right?
they have their reputation on the line. And I just wanted to ask, does this fall under reputation management?
It could. But it probably falls under some sort of legal insurance, right? Because it's not them getting defamed. I don't think you can insure that. But you can, if you are defaming someone and they sue you, you can get some sort of legal insurance, right?
Yeah.
And then another part, I'm talking about Moist Critical a lot actually, but recently he got sued for fair use. It turns out that the case didn't go anywhere. But he was using other people's content in his videos, and he was talking about something. I think he was oddly enough talking about insurance, talking about everything. He was following the hurricane in Florida on a live stream, and he was using someone else's content to do that. And he then got sued by the people who made that content. And that's another type of thing. Like, okay, well, do you have insurance to bring in the lawyers, right? Because like, yes, they make a lot of money, but they probably don't, they probably have a lawyer on retainer, but like, do they have the means? Do they have the knowledge to be able to solve these types of situations as they arise?
I mean, do you, so when it comes to something like using someone else's content on your videos, what typically happens? Like, how do insurers actually cover that risk, or like how is this claim then settled?
Well, I mean, it's like professional liability type
Okay.
insurance, right? It's the same as like CNN, for example, and they say something incorrect and the company gets mad at them and sues CNN, right? There's a type of insurance that comes in there for that professional liability, right?
Right.
And it's the same with professional advisory, right? Like let's say you are a person who goes out there and you put yourself as an expert on a certain topic. You're a doctor who makes YouTube videos, and you explain how to go through a certain type of, procedure. You explained it incorrectly by mistake. Someone didn't realize that when they were watching your video. They're like, oh, I'm going to try that next time I do a tracheotomy or something. And then obviously it goes wrong. They could technically sue you, right? You were speaking as a professional. You needed a professional liability, unless, and that's why you see these disclaimers at the end sometimes, I'm not your doctor. Or if you watch any lawyer on YouTube, right? There's a couple really big ones, Legal Eagle, different things like that. They make it very explicit that they are not your lawyer, right?
Yeah.
Like, do not take, cases vary time by time, but I am not your lawyer. And that's purely because they don't want to be sued for saying something that's incorrect, right? Like obviously the lawyers know best. They deal with insurance companies all the time. But there's other professionals on YouTube who maybe don't make the disclaimers that they should be making, right?
Yeah.
I mean, it's at the very start of our podcast. We said that we are not insurance professionals. We're just kind of talking about it because we find it interesting, right? I really hope no one listens to our podcast and says, okay, you know what? I'm going to get parametric insurance for my tomatoes outside. And then, it didn't work out. And I'm going to sue these guys for giving me bad information about parametric, right? But it could happen, right?
Yeah. And I mean, does the creator economy, like stuff like this, does it fit into like things that traditional insurers cover? or
Yeah, and that's kind of where the emerging markets split a little bit, right? Because it's the same if we go very back to the satellite, or no,
Mhm.
to the cannabis piece, right? The truck on a cannabis farm,
Yeah.
it probably can get automobile insurance, any basic automobile insurance. But
Mhm.
then when we're talking about product transit, right, that's a different type of insurance. When you're moving your product from one place to another, that's a different type of insurance. Maybe that would need something specialized, right? And it's the same with this creator economy thing, right? If we go back to Mr. Beast and his set design, he can probably just get the same thing that movie studios and TV shows get in terms of setting up these sets. But then if we're talking about, he locks someone in a basement for 100 days for $100, there's probably a different type of liability insurance or a different type of waiver that he needs to get sorted for that specific type situation, right? I doubt he gets everything insured. He probably should, but then
Yeah.
again, with the size that he is, he could probably get his own insurance market or underwrite himself and put some money aside, type thing. So with all these emerging markets, it's a little bit of push and pull, right? Same with biotechs. Healthcare insurance already exists. Insurance for, GSK, for Bayer already exists, right? So yes, there may be a new type of subfield. Some of it can be covered by existing products, some of it can't be, or some of it can be covered by existing products, but there's not enough understanding to price it at a rational level, right? So we already have, surgery insurance, but gene therapy, we don't know enough about it. So maybe we'll sell you gene insurance or gene therapy insurance, but it's going to cost you 600 million times more than it would normal insurance, right? Just because we don't know what the hell's going on.
Yeah.
So, and that's what I kind of said in the start, in the sense that emerging markets doesn't necessarily mean emerging products.
Mhm.
On that note, I do think we need to wrap up here. I think we're kind of hitting time here. Harsh and I like to yap. Mo is usually a little bit better at keeping me in check because I'm definitely the yapper in this office. But any final thoughts as we hit the almost the 50-minute mark here?
Yeah, I mean, emerging markets, they're difficult to insure, but I feel like as we discussed, the more people test these different areas, the gray areas out, and we actually see real life examples of things going wrong, I feel like insurers can definitely place these covers better.
Mm.
And
I mean, yeah, I think you're completely right, but it also kind of begs the question why there isn't, we have parametric, we have claims-based insurance, but why isn't there some sort of predictive insurance, right? Like for these emerging markets, we will give you insurance. It will be more expensive, but it's going to be predictive based on these scenarios that we come up with, right? I guess you could do parametric for the early stage of an industry, being like, let's say cannabis, right? Pre-legalization, there's not a lot of control, there's not a lot of studies, so the real cause of effect of cannabis is unknown. Let's say there's an executive out there who's like, you know what, I'm worried that someone's going to, we grow a strain incorrectly and then they go psychotic or
Mhm.
something from smoking this. I guess they could go and get parametric for that specific risk, right? In the event of this thing occurring, you will be paid out. We don't know how to price it, so we're going to give you parametric instead of claims based because we don't know what the damage is going to be. We don't know. We don't have the precedent to base the damages on.
Yeah, I think you're right because I feel like a lot of these predictions could be made with like leveraging AI into the mix. They could also.
let's use AI to make AI insurance, baby.
Yeah.
That's the way.
Yep.
But on that note, we will kind of wrap it here. Let us know if you have any thoughts on this. Emerging industries, emerging markets is something incredibly interesting. I do think that, the thing with emerging markets is that eventually they're just a part of the market, right? Like satellites is a lot more normalized. We are getting this space insurance, but it's going to be interesting to see how this progresses in the future. I am very interested to see how and if and when AI insurance will actually go to court, and we'll see that play out.
Yeah.
But this has been Coverage and Coffee. My name is Casper Harse,
My name is Harshan Nani.
and thank you for joining us. We'll catch you next week.
Thank you.